This week in the world of artificial intelligence, a paradox. The biggest names in technology are lining up to spend a mind-boggling sum, nearly $700 billion on AI infrastructure. At the center of that spending spree is Nvidia. Yet the company's stock, after years of incredible gains, has stalled. While the market at large grapples with fears of AI disruption, Nvidia's shares have been stuck in a narrow channel, underperforming many of its semiconductor peers. So the big question this week is, why has Nvidia stock hit a wall, even as the AI spending party is just getting started? Welcome to TickerWatch News for Nvidia, Week 7 of 2026. This is the weekly podcast that cuts through the noise to bring you the essential developments for Nvidia. Over the next few minutes, this report will cover the stock's performance, the top headlines, and what to watch in the week ahead. It was a challenging week for Nvidia in the market. The stock ended the week on a down note, closing around the $183 mark on Friday, after seeing significant trading volume, with nearly 160 million shares changing hands in that single session. This capped off what was described as the S&P 500's worst week since November, with tech stocks feeling the most pressure. While broader indexes were mixed, the tech-heavy Nasdaq finished the week in the red. Nvidia's stock has been trading in a tight range for months and has lagged its peers. Over the past 6 months, its gains have been minimal, while other chipmakers like TSMC and AMD have posted significant increases. This signals a period of consolidation for Nvidia, as investors seem to be taking a pause after its long and powerful rally. The biggest story this week is the growing disconnect between monumental AI spending and Nvidia's flatlining stock price. Multiple reports highlighted that tech giants like Meta, Alphabet, Microsoft, and Amazon are planning to spend a combined total estimated between $600 and $700 billion on AI capital expenditures in 2026. An analyst from the Futurum Group suggested that Nvidia could capture as much as 40 to 50% of that spending, yet the stock is struggling. This has led to concerns that the market is questioning whether the eventual revenue from AI will justify such massive outlays. Some analysts suggest the heavy spending could be pulling forward future demand, leading to a potential pause as companies digest all the new computing power. For now, the market appears to be in a wait-and-see mode, looking for more concrete proof of sustainable returns. Meanwhile, Nvidia isn't standing still. The company is making a clear push to dominate the next phase of AI, inference. This is where trained AI models are put to work in real-world applications. News emerged this week that Nvidia is acquiring AI inference chip assets from a company called Grok for a reported $20 billion. Alongside this, Nvidia introduced its new Rubin chip platform, which is specifically designed for these inference workloads and will use next-generation HBM4 memory from suppliers like Samsung and Micron. This strategic move shows Nvidia is working to secure its position across the entire AI stack, from training to deployment, positioning itself against growing competition. On the geopolitical front, the situation with China remains complex. This week, U.S. Commerce Secretary Howard Lutnick stated there would be no wiggle room on the licensing terms for selling advanced AI chips like the H200 to China, emphasizing that the detailed conditions are non-negotiable to prevent military use. This firm stance comes even as Chinese tech firms have placed large orders for the chips, forcing them to look for alternatives. Adding another layer of uncertainty, Nvidia's CEO Jensen Huang canceled a planned trip to an AI summit in India next week due to unforeseen circumstances, an event where he was expected to be a major headliner. Finally, Nvidia continues to expand its ecosystem beyond the data center. The company announced new collaborations to push its AI platform into industrial and scientific settings. It's working with Dassault Systèmes to integrate AI into digital twins for manufacturing, with Opentrons to power AI-driven lab robotics, and with partners EPRI and Prologis to study AI use in utility substations. In another partnership, Akamai launched its new Inference Cloud, which is powered by Nvidia hardware, further extending with chipmakers' reach to the network's edge. Wall Street analysts remain broadly bullish on Nvidia's long-term prospects. Goldman Sachs reaffirmed its buy rating, expecting a beat and raise quarter, while UBS recently increased its price target to $245. The consensus price target among analysts suggests there's still significant upside potential. However, there are notes of caution. Analysts have pointed to investor doubts about the sustainability of Nvidia's high growth and gross margins, which hover around 75%. Sentiment among major investors appears divided. Filings from January showed that funds like the Liberty All-Star Growth Fund and the Liberty All-Star Equity Fund held Nvidia as their top position. On the other hand, the firm Renaissance Technologies was reported to have significantly reduced its stake in the company, and Michael Burry, known for The Big Short, continues to hold put options against the stock, betting against the AI trade. While his short is reportedly not profitable yet, it shows that not everyone is convinced the rally can continue indefinitely. The overall news narrative is mixed. There's excitement about the massive AI infrastructure build-out, but it's tempered by headlines describing the stock as being stuck in a rut and unable to break out. The dominant theme is one of caution and consolidation, as the market questions what comes next. From a technical perspective, Nvidia's stock has been trading within a defined range, roughly between $180 and $200. Recent analysis suggests the stock is consolidating near the $180 support level, with key resistance seen between $198 and $205. A drop below the 172 mark could open up a path to the next support level around $160. On the fundamentals, valuation is the central part of the debate. The stock is currently trading at about 24 to 27 times its forward profit estimates. While this is far below its 5-year average multiple of 38, it's now more in line with the Nasdaq 100 index. This compression suggests the market is pricing in a period of decelerating growth. Projections show revenue growth slowing from 58% in the current year to 28% in 2027. Despite this, the company's profitability remains exceptionally strong. Its return on equity is over 99%, and its gross margins are in the mid-70s, far surpassing many competitors. The core question for investors is whether this profitability can be maintained as competition heats up. All eyes are now on Nvidia's upcoming earnings report, which is due after the market closes on February 25th. This is widely seen as the most important catalyst on the horizon. Investors will be scrutinizing the company's guidance for demand and chip orders to see if it validates the massive capital spending plans announced by its biggest customers. Management's commentary on growth sustainability and profit margins will be critical. Key price levels to monitor will be the support around $172 and the resistance near $205. The bull case scenario is that Nvidia delivers strong results and even stronger guidance, confirming the AI build-out has a long runway. This could finally push the stock out of its consolidation range. The bear case is that guidance falls short of the market's lofty expectations, or the company signals concerns about competition or margins. This could confirm fears that the best growth is already priced in, potentially sending the stock below its current support levels. The most likely base case, however, is that solid earnings are met with in-line guidance, leaving the market waiting for another catalyst and keeping the stock within its current trading channel. Thank you for tuning in to TickerWatch. Please remember, this podcast is for informational and educational purposes only and is not intended as financial advice. Be sure to subscribe to stay updated on the key developments for Nvidia and other major companies. You can also share this episode and leave a review to help others find the podcast.